This is Randy Finney with Right Side of the Chart, and this is an early session update for Tuesday, October 10th, 2024. It's 8:39 a.m. Eastern Time, and I'm obviously starting this one in pre-market. Nothing major. I just wanted to do an update. Almost got this one out yesterday, and it was getting late in the day. I just want to share some developments I'm noticing on the pretty much the top components of the Nasdaq 100. So what I'd like to do in this video is a very brief update on some, not all, of the recently highlighted trade ideas. There's just too many out there. I've been trying to spread it out quite a bit lately between everything, all asset classes, stocks, bonds, commodities, various stocks, long, short, various sectors. So I'll just update some of the things that the kind of the core stuff and stuff that matters to the markets, really. XLF, remember that's still like with most trade ideas. I told you my preference during the Fed week was kind of temporarily suspend stops on swing positions, and I just want to show you where it's at. So because initially I had suggested a stop, gosh, I can't remember which one of these lines here. I think it was that one, 45.40, pretty sure. And then we had Fed week, everything popped. We put in a divergent high, bearish rising wedge. We broke down, we're back below it. So what I'm watching now is this uptrend line. I have the pre-market trades showing here. So this chart, when I toggle them off and the regular session starts, sometimes it moves the trend lines a little, but you can see what I have there. Trend line off the early August lows that, if broken, should be the catalyst for the next leg down, and that's that. So we'll see. On the daily chart, the case is still in divergent high right there. That purple line, that's Fed day. So you can see, as I said, with a lot of things, you had the post-Fed pop the day after the Fed, and that pop's been faded, and a lot of stuff wasn't built on. So like I said, bears can't high five and declare victory, but bulls, it's a stalemate, and we're going sideways. There's pre-Fed right there. So we're trading back where we were the day before and the day of the Fed, right where we closed those 2 days. So kind of no change there. In other words, if you look at it from pure technical perspective. TLT, remember we hit we had a divergent low recently. I believe on the last update I shared this bullish falling wedge and the positive divergence and some support here. Can't remember, but yesterday I added a trend line here. Resistance level, I'm sorry, our resistance added. I noticed that, and we're kind of poking our head above it. It's minor resistance. T1 is more significant resistance right here. A lot of reactions. That's why that was the first target. So, this bullish falling wedge could play out for anywhere, any move up to any of these levels, but I still maintain these targets. Right now, this is still an active trade, and so any or all of these. And somewhere up here, this is S1R1. I think the initial short entry, yes, it was right there. So at this point, it might be prudent to lower stops wherever we had them before. I think they were up there, lower to at least break even. So at worst case, you don't lose anything on the trade. And we're comfortably above that now. Treasuries don't move that fast. I'll update that one again. But I still, based on the technicals, still favor a move down here. And at this point, those are levels that if you did book any profits already, you could scale back in, or wait till you can see a reversal off one of those levels. I'll update that one later. So really near term, it wouldn't surprise me to see it drift higher, nor would it surprise me to see it go down. I don't have a strong opinion, just showing you the resistance levels. Nat gas, UNG, remember we hit T5 zone perfectly at the top. The fifth target zone right there the other day. We have the negative divergences still at that recent high. You can see in pre-market, remember the bottom of the T5 zone, fifth target zone was 1621, which was former resistance, now support. That's been taken out. So that could be the catalyst for a pullback. And as I've been saying, as I said back here too, any pullback to that uptrend line would offer an objective re-entry for those that book profits, partial or full at T5. It would also, you can put a stop somewhere below there, and you have the bottom of the top, of the big trading range right here. Big support. So any pullback back to those levels still offers an objective re-entry, add-on, or new entry with stops somewhat below. Somewhat is relative or commensurate to the price target or targets that you're targeting. In other words, someone targeting T8, if we do get a pullback to test the top of the trading range, it's going to be another 40% run. You could easily give yourself, let's say a 10% stop, and you're giving yourself a nice 4-to-1 RR. At this point, really, I'd say somewhere down under T2 would be a kind of an ideal like max stop. If we go back into the trading range, that's if it's anything more than a relatively brief and relatively shallow back down to that T1, there's a good chance they're going to go back down to the bottom of the range once a range like that's broken out of. I'll allow for a back test, and back tests often come down a little bit through there. It's just how they work. It's not always a perfect back test. Sometimes you do get a perfect back test, and again, it would be very objective to buy that level. So, and if you're willing to ride it out, that's the nature of natural gas. You got to, if you're trying to go for the prize being a run of about 70%, and you don't want to try to get shaken out, then you got to game the little, ride out the pullbacks. And this one, like I said, I could easily see it going 7%, but I wouldn't be surprised if this thing just pops on up there and burns through the divergences. I've talked on that quite a bit on this trade recently, how natural gas, when she wants to run, she can really run, and she can burn through divergences and overbought conditions like they're not even there. Likewise, when she wants to, go on a downtrend, same thing happens in reverse. She can burn through divergences and oversold conditions and all that, and just keep going. That's just the nature of this beast. So I still like the breakout. I think it's intermediate to longer term, very constructive chart, very bullish in my opinion. Just near term, like I said, just trying to thread the needle here and show you levels that we may go back to. And if we do, like I said, objective long entries. Depends where you're at on that one. All right, what else? I already updated gold yesterday. We hit minor support. We're bouncing off that. What else? Let me get to what I wanted to do here and go over the indexes. Really, this is what I noticed yesterday. So obviously, if you're listening to this one, you probably got saw the trade idea on semis yesterday, SOXX, or any of the, you can go long, meaning buy the SOXS, which will give you a short exposure of 3 times, 300% leverage. I mentioned, somebody talked about that. Yeah, technically you do go long, you buy that to go short. Or you can actually short SOXL and maybe capture some of the decay if they grind around. But, the semis, if that trade's going to pan out, it will most likely bring the Nasdaq 100 down with it, because semis are, big subsector of tech. And a lot of those same semis, including and not limited to NVIDIA, are big components, or at least components in the Nasdaq 100. So that's what we're going to look at here, and it'll be a relatively brief video. I hope to get it out to you by the open. That'd be nice. So what I'm watching here, I don't have a super well-defined trend line, but this is trend line 1. We had a minor trend line there that broke down and back tested. Either way, we're below both of them, but what stands out the most is the current divergences, negative divergence, and the fact that there's that big, to me, very significant gap back there that came shortly after the bearish engulfing candle we put in on the daily chart at QQQ. This is a 60-minute chart, so you don't see it as a bearish engulfing there. Although, technically, you do even have that on the 60, but and that still, happened right towards the upper end of my market top range, and so I'd still maintain that's most likely the top. And this is where things start to change for me, and obviously, if we take that out, there's not much more upside before the upper end of my market top range. So I'm still maintaining this is where the Nasdaq 100 either has or still will peak in that range. In other words, you could have a double top high, you could have a marginal move high, anything else, then I'm wrong. So, but I'm trading it that way, and wanted to mention that as I did back here, and we went short for all the reasons stated then, bearish engulfing candle, that minor trend line break there. There was a very minor trend line, secondary trend line break, multiple sell signals, covered those lows, went long. Me personally, my plan was to start shorting back in, close those longs. and scale back in. And then, of course, there was multiple reasons posted again to cover those shorts and swing it back up again based on many key stocks and the sectors. And so now I just want to say we've come full circle, in my opinion. This is watch, rinse, repeat stuff. Divergent high, divergent low, divergent high. Well, that wasn't a divergent low, but again, reasons were cited to cover, including not limited to bullish falling wedge breakouts on trend line, major trend line support being hit on NVIDIA and some other key stocks. And then we got that. So there it is, guys. That's it. So now let's drill down to the top components. I wish I could tell you we had a super well-defined trend line or anything else there. And again, we're still coming on the heels of this breakout above the downtrend line off the highs, which in itself was bullish. So it's not a hard all-in short. I'm just going to show you the technical postures that will likely give us a trend reversal here on the market and most of these stocks. Again, I always say that any index or any sector is simply the sum of its parts, or more accurately, when speaking about the Nasdaq 100 or S&P 500, it's a market-weighted sum of its parts, meaning the higher market cap companies have a higher weighting in the index. So Apple, divergent high. You can see a little bullish falling wedge pattern right there. Bearish rising wedge pattern, right? With a little minor trend line break first, just like you had on QQQ. Marginal new high, secondary trend line break. Divergent low, at least divergence on the RSI right there. Rally, divergent high right there. Drop down to support, positive divergence right there, aka bullish divergence. Rally, right? You get it. So watch, rinse, repeat stuff. So this is Apple, back to the biggest component. It's been leapfrogging all year for the last year, but between Microsoft, NVIDIA, and Apple, who holds the top spot? Apple right now, I'm showing at 3.5 trillion. But you can see there's pre-market trades. So this is what I noticed yesterday. You have divergence, a clear negative divergence on the Apple 60-minute chart, but no sell signal yet. This trend line may again come in, may tweak a little when the watch. I'll show you what I mean. It's weird how it does that when I show data for regular hours. See, then that's how I had it there. Yeah, either way, connect off the recent lows right there, and then there it is. You can see all the reaction lows, September 25th, and then September 27th right there. All right, let me just turn back on pre-market so you can see what's going on today. So Apple's coming down a little bit, but right at the trend line. Microsoft actually looking better than the rest. And I do this sometimes too. If you want to trade individual stocks, there's some alpha to be gamed there, I believe, at any point in time. If you have the time, skill sets, and effort to avoid or go long the most bullish stocks and or short the most bearish stocks instead of just trading the index, you can typically outperform it. So Microsoft has a bullish falling wedge with positive divergence. Hasn't broken out, so doesn't guarantee the divergence will play out. And just want to point that out. So divergent low, divergent low, divergent low. It's making so far, as you can see here, it's in a near-term uptrend. Uptrend defined as higher lows and higher highs. Although it's still off that high there. So again, depends on what perspective and time frame you want to look at. That's the very near-term trend. If it can do that, that near-term trend stays intact. But this could be the more intermediate term trend, or may morph into that. Right now, you still have to go out and start taking out some of those other lows. So just wanted to share that one for you. NVIDIA, not much of a change there. Still in my new latest shorting zone right there, coming off that divergent high. Recently broke the trend line. It's back testing from below. So as long as it remains above there, and especially above those previous highs, that one looks like it's going lower with the negative divergence. Again, wash, rinse, repeat. Divergent highs, you want to be short. Divergent lows, you want to be long. So going for the since the stock topped, we had that divergent high. We game that. We game that. We game that, and we game that, and hopefully we game this, and then some. Alphabet, big divergent high there, big sell signal on that primary uptrend line, big bearish rising wedge. Was good for a drop of 24%, followed by a big, equally as powerful divergent low right here. So far, it's still rallying off that divergent low, but You got it. Divergent high. This one's up in pre-market right to resistance. With the others, with the outlook, one could even take a shot here and keep it relatively tight stop. A little bit over that resistance is about one. I have it at 168.77, so give it a little bit over that. Sometimes I'll take trades long or short in anticipation of a trend reversal that hasn't even happened. 99 out of 100, if not 100 out of 100 traders want to buy Alphabet based on this strength and can see no reason to short it. And again, there's no sell signal. Sell signal would be a break of support, maybe a break of this minor trend line, but there is a push into resistance following a big divergent high and longer term bearish technicals. I just flipped over to the daily chart now, and there's that big divergent high, trend line break. You can see it on the daily. So again, not a screaming high probability shorts, counter trend, at least near term counter trend trade, especially if you're keeping stops tight. But again, pretty decent resistance. Not great, but decent. And again, just passing along the technicals and what to watch for today. Maybe you don't want to trade it, I try to give you my convictions. You can usually hear my voice, how confident I am on something. I'm not trading Alphabet. I do have some NQ shorts that I've added in my trading account based on what I'm seeing right now, and plan to add when these next things break down. That's why I'm doing this video, is to show you what to watch. And that would be, it's not a great trend line, but it's a minor trend line there, and break of that, and then that support level about 163 and change should do the trick. Amazon, that one's clearly coming off divergent. This is a well-defined textbook bearish rising wedge pattern. No guarantees to any of this stuff, but typically the cleaner the pattern, more well-defined, negative divergence. Again, watch, rinse, repeat. Let's scroll back as far as we can. A little divergent high, little correction, divergent high, correction. These are mostly double-digit swings. That divergent high extended to DH2, another correction, and the divergence kept extending all the way here. So it's really DH1, 2, and 3, an extension of the same divergence that was building from this point, and culminated with this divergent high there, which was followed by a pretty swift drop of 25%. And this is swing trading. So in just a matter of it, let's pick that divergent high. Let's just say for kicks and giggles, you shorted that divergent high. Here, I'll turn off the line so I can grab it exactly. And you're not going to short the high and cover the low. Sometimes we do it, but that's about again, almost 25% drop there in just 28 days, 28 calendar days, which is 1 month. Pretty good stuff. If you can even get a fraction of a 25% drop in a month, and repeat it month after month, you're doing pretty good. You're beating the heck out of the market, and that's what we try to do here. Divergent high, drop, and this is just an extension of the same divergence. It's really comparable, similar to that divergence there. So there's your sell signal. Remember, divergence is not a sell signal. What is our trend line breaks, just like downtrend line breakouts or buy signals, and that's it. So then you kind of turn to the daily chart, and you look at the bigger picture on Amazon, and you have a primary trend line off the January 2023 lows, when this was, along with Apple, my two top picks, with an overweighting on the FANGs overall, back right in the beginning of January out of the gates. We went long there. That's that same starting point that has kicked off this rally. So that's that big last drop we had off that. Remember, the divergence was also shown out here on the daily chart. And we broke the primary uptrend line. Backtest 1, rejection. Backtest 2, rejection. So that's the longer term outlook. And so therefore, when you look at the daily chart, you say, well, if this plays out, then we're looking at a much bigger move than what might be projected on the 60-minute chart. Since we've already got reject off the trend line, ideally you don't want to see this high taken out. So you can short it with a stop somewhat above there, let it run, be a runner trade. But again, maybe right now, swing, wait for some additional evidence on long-term positions to build a heavy, aggressive short position. It's just, we're not, and it's hard to say in time. In price, we're not too far away from that. Let me just try to quantify it for you, and I'll get back to the rest of these tech stocks. So in In price, this is QQQ. Remember what I want to see, and I'm going from where we're at in pre-market. I want to see a failure back below the breakout of the downtrend line, the blue downtrend line off the highs, as well as that uptrend line. And from current levels, it's only 4%. So we'll see if and when it happens. It could happen relatively swiftly, or we could zigzag down, or we may go up first and then down. And so something to watch for. And that's where this breakdown here, and then especially that's kind of the all-in moment. That's one I've been harping on for a while now. That when that reaction low gets taken out, we'll probably then waterfall down and take out that August 5th low, and that'll be a all hands on deck moment, all in short moment, back the truck up kind of thing for me. Alrighty, back to the big names. Amazon I just covered. Meta. See, this is a common theme. When I start seeing the vast majority of these market leaders with divergent highs, wash, rinse, repeat. That was a divergent low. So you can see the divergence there. But you can see, again, swing trading. So maybe this market's going to keep zigzagging higher, and that's fine. We can keep getting, high single-digit, double-digit swing trades on these, just gaming these little divergent highs and lows as we zigzag higher. I'm all good with that. If the bottom starts to fall out, maybe one of these will become a runner trade. And, again, more collectively, I'm looking at the Nasdaq 100 here. But any of these, of course, you may own these personally or want to trade these personally. I know there's a lot of folks on here that trade options and want to kind of gauge, where something's going on individual stocks, and so you might have some takeaways there. It's an extension, divergent high, big divergent high, divergent low right there, rallied, divergent high, divergent low. So you can see wash, rinse, repeat off these divergent highs. This was a divergent low. You can see right here marked. Rally, divergent high, bearish rising wedge, sell signal breakdown, divergent low. These are the big trends, guys. All right. This is why I wanted to do the video and show you that it's not just one, it's all of them. And right now, bet you most listen to my voice don't want to short because we're in this current uptrend. The market feels strong, doesn't it, right? Election's only 5 weeks away. The market's not concerned. It seems everybody, at least I know the most, most intelligent people aren't voting for anyone in this election. They're voting against someone. So you have it's the lesser of two evils kind of vote. But the market doesn't mind that. Doesn't matter that they both have huge, both going to blow out the deficit based on their current spending plans and economic plans. But again, let's not, and things are getting heated up in the Middle East. But again, it's okay because the market doesn't care. But this is when I like to short when no one wants to short. I like to cover when no one wants to cover and go long. They want to start shorting. They don't want to buy longs. That's when you start to get in that mindset, not just for the sake of being contrarian. That can bulldoze you, especially in a strong downtrend or a strong bull trend. But you look for the technical signs, and I'm far from a purely mechanical trader, but this is what I wait for, and that's why I'm sharing these with you. I don't want to, I don't want to short when this thing is already, down here. This is where I think it's going to come to first, and then a break of this level. Tesla, this is, by the way, break of that trend line will bring it down even more there. So that's it. So collectively, I've showed you, other than Microsoft, I think you have the same technical posture on all the top Mag 7 that I just showed you on Mag 7 stocks. But let's continue on just a few more. I'm going to go down to about the top 15 or so, and then we'll wrap it up because that matters too. Broadcom, as you recall, highlighted these 200-day moving averages, both of them, both tags. That's where the buyers, I said, likely to step in, and they did it again there. So that's the big number. That's the kind of all-in death to tech semis when Broadcom and NVIDIA take out their, the NVIDIA have the comparable trend line and support levels. And right now, step number one on this daily chart would be a failure of the breakout of this downtrend line. That's just like QQQ. And then step number two, again, to support a longer term bearish case. So what does that mean? Okay, translate that. Well, okay, let's say you have a sell signal right there. You have, here, we go back to the 60-minute chart. You had a divergent high, which I like to see. Then you had a bearish rising wedge, and then a breakdown and a back test. And we're just barely off the breakdown. We're only right now, as I do this video, we're 1.6% below where we broke down the other day. We're at minor support, but being that we're fresh off the breakdown and we already had a back test, I think is objective to short here. I covered the semis yesterday. So, we have and again, if you shorted SOXX or you bought XOSS, the 3 times short semi ETF, you don't need to short Broadcom because you've got it. You're going to have that. It's going to move with the sector. But so what I need to see and what I think we'll see based on the technicals is a move down, then a failure of the breakout above that downtrend line, which is going to be very bearish. Why? Because everybody that bought because of the breakout, well, the reason for buying was just wiped out. And then that's a failed breakout. So, they'll be underwater because even if they had exact precise timing and they bought the breakout the second it happened, well, the trend line comes in lower and lower every day. So, at that point they're going to be underwater. And it's not a matter of are there stops on Broadcom below that level. It's just where are they at and where's the cluster of them. And the more that get hit, the more it brings in the selling. So that hasn't happened yet. It's 10 steps ahead. But I don't want to, be telling you, hey, let's short Broadcom, here. That's where you'll see a lot of people wanting to short it when the stock's already fallen 20%. I'd rather go in here with a tight stop. Where would that be? You already backtest the wedge right above the wedge. So quantify for you. About a 5% stop loss, maybe 6 at most, and targeting, hold your nose and jump in and say you think the breakout's going to fail and the stock's going to go back, take out the fall back below there and finally take out those 200s and then hit these longer term targets I laid out here, 120 and then 91. And so you have about a 6-7%, 6% or so downside to make 31 and then 47%. So what do you do with that? Well, you can put such a small amount of money in it that 6% loss, if you beta adjust it down to 50, meaning a half a position or 0.5, half a position size, a 6% loss is really comparable to a 3% loss, meaning you're taking a half position. And so that's negligible. And even if the odds, because this is in an uptrend, I will say the odds against that trade panning out are below average. But I always factor in, I weigh my trades with 2 components. I look at the RR and then I look at the probability of success. And typically, if I'm going to take a trade with lower probability of success, and let me say this, guys, counter trend trades always have a lower probability of success. I like them. I like to pick turns. Obviously, you can get cut, try to catch a falling knife or the other way around on the upside. However, again, I just quantified it for you. So a half position, 3% loss to make, and that's I have a high degree of confidence that if we break the trend line in the 200-day moving averages, we'll go down there. And so that's 48% gain. Cut that in half, so 24% profit adjusted with a half position size. So that RR is phenomenal. That's 8-to-1 risk reward ratio. Doesn't get much better than that. And again, so that's why if you take 10 of those trades and the probability isn't that high and you're stopped out on half of them, then the other half works out, you're making money because you're only losing 3% on those stopped out trades and you're making 24% on the winners. Okay, a couple more to go. I'm just going through so we can get away from some non-tech companies. Costco, beautiful little rising wedge pattern there, uptrend line breakdown there, sell signal. My targets on Costco are 841.12, 841 we'll call it, roughly 786 and a quarter. You got the 200-day moving averages coming in there. You can see it ultimately down here to this trend line. If these are kind of the longer-term targets when I do this are kind of if my bear market scenario plays out, my longer-term targets on SPY and QQQ, which I gave you back in late June and have shared many times since. That's assuming that that scenario is in play there. That's the longer term targets. But again, most of you are probably concerned right now about today, tomorrow, next week, especially if you're going to try to trade a counter trend. So we put in a divergent high there, and then we broke the wedge right there, and we're moving lower, just like we had a divergent high there. If you shorted it, you made about almost 12%, and then you would have saw this divergent low right here, and maybe other reasons on the daily chart, pullbacks to support, etc. You can see there's a reaction high there, reaction high there, reaction low there. That's great support. I should add a line there. Well, I'll put it there now. I wasn't trading Costco back then, so I didn't have a line. And so that's it. So watch, rinse, repeat. Divergent low, be long and strong. Divergent high, short. Divergent low, long. Divergent high, short. Works like that. ASML, one of the better looking semis, and unless this breakout fails, I'm talking about the breakout of this downtrend line on the 60-minute chart. We had divergent low, but you can see we did, like so many, we have at least divergence here on the PPO right now, and a minor uptrend line in which to trigger a sell signal, even better if and when the primary downtrend line gets taken out, meaning we fall back below it. Netflix, rising wedge on the 60, divergent high. I don't have the DH here. You can see my divergence lines. Breakdown, dancing on the support around 700 right now. Let's take a look at the daily chart. Actually, this is the one you'd want to use. Well, no, let me tighten it up. We're right there. I'd wait for a break of the daily trend line, especially a solid close below it. Big old rising wedge pattern. A lot of downside in Netflix. Once we have a solid daily close below that wedge. AMD, Advanced Micro, minor uptrend line right there. You can see it. So, all right. My point of this video was to be redundant and repetitive. That's a divergent high. The stock fell 38%, almost, right about 38%. Ended with a divergent low. It's good for a rally of about 25%. Ended with a divergent high. Good for a drop of 12.5%. That was actually not marked here, but you can see it. And divergent low, you get the point. This is a swing trading, folks. A divergent high, drop of 34%. And all along, while it's doing that, and you could be, if you're really just focused, hyper-focused on any one stock, sometimes I've done that in the past, where I just have one stock or one index. I'm just, not only thing I'm trading, but I just get hyper-focused on it. And you can just trade it, if it's very tradable to the technicals. And then learn when those stop working, when it stops trading so well. But that's it. So this is our latest divergent high. Divergence is not a sell signal, but a break of this trend line right here off the recent lows is. And you can see, historically these drops, and it's in a downtrend since this point. You can see making lower lows and lower highs. So these previous two drops in the downtrend were about 35 and 38%. So if you were to take a short there, what's logic would would stand to reason that you can be looking at least another 38%. But I go to the daily and weekly charts. I see big things. Why? Because here's my long-term uptrend line. I just toggled out to a weekly. This is a big divergent high here. So what happens if we go down 38%? Again, it's going to put us right here. It's going to put us to look at that, coincidentally to my next target on the daily at 98.56. Okay, so do you cover it 38% like you did those last two 38% drops or so? Well, yeah, I would, because you probably have a reaction there. You'll have other semis fall to that level. But I would also be looking to position for an even bigger drop, because we have then at that point, or maybe even hold out, depending on how things look. Again, we can only say it from when we get there, because we would have taken out the primary uptrend line off the 2015 lows. This is a very significant bull market uptrend line. So within that bull run, you have plenty of big double-digit corrections to trade, especially those off divergent highs. But this big divergence here indicates this stock's going to fall a lot more than 38%. It's already off the highs, half the value's been cut out, and you're saying, oh, Randy, you're crazy. This thing's already dropped half. into the recent low. Um, I do this. I can go back. You can just look at historically when the trend changes in the semi sector and you get a bear market. I mean, AMD has been around forever. It's been a big chip maker for a while. There was a 96% drop back then. Okay, rallied up, fell again at that point. It was about 82% drop. You can measure the corrections yourself. And so, no, I don't think that's an aggressive target to call it down here to at least that 58.91. If so, that's going to be a drop of about 74%. And it's kind of par for the course with AMD. Just hate this. And look, when you take the supersized bull market, a la the Fed and everything else, that sets the stage for an even bigger drop ultimately. But all right, let me move on. I got a few more, and we'll wrap up here. Maybe we'll wrap up at that. I think because I can go through, and you're going to see the point I wanted to bring out is a lot of these stocks, the vast majority, have either just put in or they're coming off divergent highs, and some have already broken down, triggering sell signals. And those that haven't, T-Mobile, for example, bearish rising wedge, 60-minute chart. I'm seeing just a lot of evidence right now, guys, to be, and so, again, I wear two hats. I'm a typical swing trend trader, long-term accounts. I've got some core shorts there I'm still sitting with, planning to add to my trading account. I'm going to jump on this stuff today. I'm going to have price alerts, and when you see things like T-Mobile and all these going off, they're breaking down, get in quick, because the way it works is when you look at the top components, if they're all breaking down, you have individual trade. You have people that trade the indexes, and I showed you the QQQs. There's a kind of trend lines. They're not super well defined, but a lot of these individual stocks, there are pretty well defined uptrend lines and support levels in which to short. So you're going to see long side traders exiting on those support breaks, short sellers stepping in, and it could be a pretty swift down. So that's it. I'm going to get the video out to you, hopefully before the close. It's probably going to come out to you right after the close. I have to upload it, and YouTube takes a little while, but it should be out to you guys shortly after the close, and it won't be stale dated then. You have the levels to watch here. All right, guys, this has been Randy Finney with Right Side of the Chart. Have a good one.